Well, good morning. We will not bury the lead today. The big news, I think the big news, because it's kind of odd and unusual and we can't quite figure out what's going on. But according to Tesla AI Girl, she says, eek, currently installing as one type FSD 12.3. And then Elon responded that this is a very big release, technically should be called version 13. Well, then I searched around and looked everywhere I could look, and we can't really find out much more than this. We don't know how wide the release is. We don't know whether it's only going to that special 100 or so. There's a bunch of conversation about this version 13 versus version 12. Remember that version 12 was eventually supposed to go off beta. This one, obviously, so far, of course, obviously version 12 has not gone off beta. Version 12.3 doesn't appear to be going off beta. And according to, we have Bradford Ferguson driving all around the country right now, kind of checking out all the different systems and having other folks that are pretty familiar with the other versions ride with him, and nobody thinks that this should be off of beta. So I'm not complaining or trying to create trouble here. I'm just saying version 12, version 13, we're not ready. It's getting better and better and better. There's no doubt about it. But so far, at least, we're still looking at a very, very, very good automatic driving system, automatic helper. But it's not ready, for prime time quite yet. All right, Teslarati is reporting about China sales this morning with 13,200 insurance registrations in the week ending March 10. Tesla's China domestic vehicle sales seem to have seen a 5.6 week over week increase. Okay, 5.6 week over week increase. They estimate that China saw 12,000 vehicle registrations in the week ending March 3. Okay, so there's your increase. Considering Tesla's China's results from the week ending March 10, it would appear that the electric vehicle makers, what do you mean appear? I guess they were saying that we don't know until the end of the month whether these are real. Anyway, domestic sales so far down 24.7 quarter over quarter. Not shocking. You got Chinese New Year. You got fourth quarter versus first quarter. I think you guys all know that. Year to date, Tesla's China local sales are currently up 2.5 year over year. That would not be a great number, in my opinion, now that we've got all of January and February, which would take into consideration the Chinese New Year that moves around. So we'll see what happens in March. It doesn't look to me like we're going to be looking at very substantial increases in China for the first quarter. But remember, China is fairly well maxed out, so it's not going to be shocking all year to see China numbers similar to last year's China numbers. I would like to see it up a little bit more than this, though, based on my understanding of their capacity. All right. Berlin is ready to go. The factory is up and running, but Tesla is mentioning this morning it's going to take a while to ramp that up, obviously. And so we'll see what happens over the next week or so in news coming out of Berlin. But apparently the German press is all over this and talking about it. So that's that's all good. They are positive, in other words, but there are more protesters marching. They're eco-protesters complaining about the potential expansion of the plant. I'm assuming these eco-protesters must only feel like bicycles and walking are the only solution because there's all kinds of gasoline and diesel companies manufacturing cars in Germany. Why wouldn't they be protesting them? Anyway, the overall news is good this morning for Tesla. So therefore, it makes it a little hard to understand why the stock is down $5. What's going on this morning? The market is generally up. Tesla is down. Well, yeah, generally up. The market is kind of flat this morning, actually, but Tesla down $5. What is that? I don't see any news. Anyway, I got no clear reason for that I can come up with right now. We'll take another look again in a few minutes and see where we are. All right. This is Randy Kirk. Hit like, subscribe, hit notify. I know sometimes I just repeat the same thing all the time. And so you're like, oh, whatever, no, hit the like button. Come on, guys. All right. And then later on this morning, we've got Brian White. He will be giving his update on the robot industry in general. All kinds of new news this week. He's been reporting a lot of stuff on his channel. So we're kind of consolidated into one program and see where he's looking at with regard to the overall bot business and Optimus, of course. Specifically, then Nicholas Gibbs will be here Tuesday night to do the good news program where the Tesla stock price will have turned around by then. Absolutely. Well, we certainly don't know that, but we can hope, right? Never lose hope. So the Wall Street Journal did a very negative article on BYD's export business. I read the thing looking for that one piece of good news, that one thing that would give me confidence in the article. Because when I see an article, I don't care whether it's FSD, I don't care if it's whether it's Tesla or whether it's General Motors. If the entire article is negative and there's no balance, there's no, well, we talked to this person, they said, well, not so much. No, this article was just negative from beginning to end. That causes me to be concerned about the validity of what they're saying. In the meantime, BYD responded just generally to the article. They just said, baloney. Well, okay, they didn't say baloney. They said, no, what are they talking about? But they didn't give any specifics. So anyway, for what it's worth, that is what's happening with BYD. The issues were having to do with mold on the some of the product that was coming in from China. Apparently, that's a common problem on cars that are shipped overseas. The question then becomes, how well do they clean it up? That is what the Wall Street Journal is talking about some scratches and dings and things on the cars that are coming into port. That seems odd. Anyway, not sure. The Consumer Price Index. Okay, this is the big thing for the day. This is why I got up extra early this morning, was to find out that the Consumer Price Index came in pretty much as expected. But you know what I do on this channel. I go right to the source, and I'm going to give you a lot of data. I hope you want this data because it's anyway. Let's talk about what happened. So the overall number was up 0.4% in February. This is not good on a seasonally adjusted basis. Now, it was up 0.3% in January. So the bad news is that it was up 0.3 in January, which is way above what the Fed wants. And the worst news is it's up even more in February. This is not the correct direction. Bureau of Labor Statistics reported over the last 12 months, the all items index increased 3.2% before seasonal adjustment. I don't know why they give us one thing about seasonal, another one not seasonal. And maybe they're going to seasonally adjust it later. Anyway, but this is a miss. Well, it's pretty much what the economists were expecting, but it's a big miss again for the folks over at Truflation. They said it was going to come out at 2.9, so they missed again. I don't understand why. I think that the numbers that they're putting out are excellent. I just think that sometimes their analysis is missing, and I don't understand why that's happening. I think they need to find out what's happening with their top analyst person and see why they're missing so many times. All right, so let's get into the details here. The index for shelter rose in February, as did the index for gasoline. I've been talking about that. We've got the gasoline prices going up almost back to where they were this time last year. These two indexes contributed 60% of the monthly increase in the index for all items. The energy index rose 2.3% for the month. The food index was unchanged. That's an interesting one, as was the food away from home index. And yet that's the one that we're seeing on Truflation, showing the food away from home is going crazy, but they're confirmed in the food that you buy for your home. Index for all items less food and energy. Okay, this is the core index. That rose 4.4% in February, as it did in January. This is really not good news. The market is taking it pretty well. The market is flat this morning, but this could actually cause the Fed to push out their decision beyond June to lower numbers. 0.4, this is, 40, this would be on an annualized basis. If you continue, this is close to 5%. This is not good. Indexes which increased in February included shelter, airline fares, Motor vehicle insurance, we know this is going to come back down. Apparel, we're seeing that on Truflation going down. And recreation also shown going down. The index for personal care and the index for household furnishings and operation were among those that decreased. So household furnishings and household operations, I'm guessing that means repairs and things. I don't know. All right. The all items index rose 3.2% for the 12 months ended February, a larger increase than the 3.1% increase last month. The all items less food and energy, the core was up 3.8% over the last 3 months. The energy index decreased 1.9 for the 12 months. Anyway, energy. The energy index rose. The index for natural gas rose. Fuel oil index increased 1.1. So that's not too bad on the fuel oil. Despite the monthly increases rather, the energy index fell 1.9% overall during the last 12 months. All items less food and energy. The index for all items less food and energy rose 0.4, as we said a few minutes ago. Shelter index up 0.4% in February. If you break that out, rents rose 0.5% for the month. This is just not what we're seeing. And I'm not just talking about Truflation here. This is not what we're seeing on any of the Chase Schiller. We're not seeing this on Zillow. We're not seeing this on Redfin. None of these are showing rents being up. Why are the rents continuing to show up? Anyway, all right. I think this kind of concludes it. So overall, not a good report in my opinion, but pretty much on what was expected. So therefore, the market, last time I checked, is about flat. All right. Now, you know that I really put a lot of stock in this next one, the National Federation of Independent Businesses. Their optimism index decreased in February. Decreased in February. Their optimism index decreased to 89.4, marking the 26th consecutive month below the 50-year average of 98. So 10 full points below, or 9, I guess if you want to be technical. 23% of small business owners reported that inflation was now the most important business problem operating in terms of operating their business. That was up 3 points from last month, and that replaced labor quality as the top problem. While inflation pressures, quote, while inflation pressures have eased since peaking in 2021, small business owners are still managing the elevated costs of higher prices. They're trying to manage them. The labor market has also eased slightly as small business owners are having an easier time attracting and retaining employees. The key findings: reports of labor quality as the single most important problem for business owners decreased 5 points. That's a big amount, to 16%, the lowest reading since April 2020, suggesting a fairly big contraction. The net percent of owners who expect real sales to be higher increased 6 points from January. So now a net negative 10%. So 10% total, how will you say this? Of all the people that they talk to, 10%, so I think this would say 45% think that their prices, that their sales are going to go up. 55% say they're going to go down. I think that's what their sales are going to go down. I think that's that negative 10%. Wow. Why couldn't you say it that way? Small business owners' plan to fill open positions continues to slow. Seasonally adjusted 12% planning to create new jobs. Only 12% planning to have new people coming in. 37% of all owners reported job openings they could not fill. That's a big number, 37%, but that is down 2 points from January and the lowest since January of 2021. The net percent of owners raising average selling prices declined 1 point, seasonally adjusted, and the lowest reading also since January 2021. All right, 56% of owners reported hiring or trying to hire. 56% last month, but down to 12% this month. 25% of owners reported few qualified applicants for their higher open positions. 26% reported nobody, not a single person that was qualified that they could find. 54% of owners reported capital outlays. 54% capital outlays, but that was down 5% from January. They were basically spending 35% spending it on new equipment, 23% on acquired vehicles, 15% on new or expanded facilities, 12% spent money on new fixtures, and 6% acquired new buildings or land for expansion. 21% planned capital outlays in the next few months. A net negative 13%, net negative again, 13% reported higher nominal sales. The net percent of owners expecting higher real sales, that was what we just talked about. Okay, inventory gains. They're not expecting negative, it's a net negative, expecting inventory gains. So they've got the inventory they need. This is what we've been talking about the last couple of days. Average selling prices, they are net percent of owners raising, declined 1 point from 21% now, still increasing prices. 23% reported that inflation was their single most important problem. 16% reported lower average selling prices, seasonally adjusted. That 35% reported raising compensation, okay? And 11% cited labor costs as their top business problem. That was down. Okay, 3% of owners reported that this is the big one, in my opinion, this is the one nobody's reporting on. This continues to be consistent for 3 months in a row. Only 3% of business owners 3% of owners reported that all their borrowing needs were not satisfied. Let me say this a different way. Only 3% of these small business owners that they talk to, when you talk about small business owners, this is 500 employees or less. There's 3% are saying they can't find the loan they need. 24% reported all credit needs met. 61% said they're not interested in a loan. And that 7% reported their last loan was harder to get than the previous attempts. You know, I missed one up here above. Let me see if I can find it real quick on the inflation. And that was the business of clerical workers, clerical workers. The consumer price index for urban wage earners and clerical workers increased 3.1% over the last 12 months. This is what they are getting paid. That was the one I missed. Okay, so they are the amount of wages going up is also still high, but not killer, not a horrible thing. Okay, so let's see what all this is meaning to the markets at this point. Okay, Tesla is still down $5, and I can't explain it. Apple down. So we've got a kind of a reversal of yesterday, where now all of the in favor Mag 7 are up, if at least a little. Google being even Google's up a little, but Apple and Tesla are down. Tesla is now bottoming and beginning to turn up a little bit. We have got things are moving up slightly right now in general. So we got the Dow up 72, NASDAQ up 51, S&P up 16, whereas when we started just 10 minutes ago, 12 minutes ago, whatever, we were pretty even on that. So let's give it in percentages. We've got the Dow up 0.21%, the NASDAQ up 0.38%, and the S&P up 0.39%, with Tesla down 2.39. We have got the Cathie Woods all down this morning. Again, inflation is generally going to mean higher interest rates. Higher interest rates impact all the Cathie Woods. All of their valuations are affected. Their potential sales are affected because of higher interest rates. And of course, that's probably why Tesla is down this morning, tending to go with the Cathie Woods. I've been talking about this for 2 years. Nobody listens to me. Nobody has said, oh, we should look at Tesla and compare it more to the Cathie Wood stocks. But here we have it again, over and over again. Tesla moves more like the Cathie Wood stocks. Someday they're going to listen, really. Okay, let's see. Let's go ahead and take a look at what is happening with those bonds. Well, the 10-year is up is up 4.3 basis points, and that is kind of right along with all the rest of the longer term. The shorter terms are actually not going up as much. So there's a little inversion compression there. But in general, the 2-year and the 10-year are both up around 4 basis points this morning. Not shocking given the news. So the 10-year is now at 4.145. I just don't want to see it go over 4.25, as many of you know who follow the channel. Okay, let's look at oil. We've got oil this morning is down 12 cents. So, you know, I should just say $78 a Texas Intermediate every day, and I'd be right. I mean, it's 77.85. Brent also unchanged. Natural gas up 1.59% at 1.7, almost 1.79. Very close to where it's been. We have got the dollar moving a little higher after the inflation data. Because why? Because that means interest rates will be higher in the United States, and so it attracts dollars to the United States, which raises the price of dollar. Okay, we've got gold down a little bit this morning on this news, 2168. Okay, this is the opposite of normal over 1 million years. Gold usually is a fight. When inflation is trouble, gold goes up. So gold, which has been at all-time highs, maybe selling on the news? Nah, doesn't sound right. More what probably I was talking about last night, where you've got these foreign governments buying gold, and maybe this morning they're not. We got copper down a tiny bit this morning, 0.46%. You have got Bitcoin actually about as even as it could be, but sitting there at 72,283, way up at a high. We have got we already talked about the US stock market. So then we go back and check to see if Tesla is continuing to move up, or better than it was, rather. It's now at $4.41 down, which is better than $5.50. So that is the right direction. Okay, let's see here. Yesterday, Brian White helped me out, and what we did, he's been doing a bunch of videos on his channel about all the various robots that are out there right now, 21 companies that are doing various things with robots. And so we kind of went through some of that, and also Optimus. Where are we in the robot business right now? What are expectations? It seems like everybody is coming around to the idea that 2025 is going to be the year when a lot of folks start shipping robots for real. That's pretty incredible to think about. Are you thinking about this? I mean, holy mackerel, what a world we live in. And Starship trying for the third time to Thursday, probably Thursday, Friday, Saturday. Oh my goodness, what a week. This is going to be a great week. Okay. And so therefore you want to go check out the Brian White video. If you haven't already looked at it, that card will be right here. And as mentioned earlier, we have got Nicholas Gibbs later tonight, and Brian White again this afternoon. And he and I will be talking about the real numbers, the 2.4 million. Yeah, that's what we should be looking at selling this year. Why not? Why is the sales and marketing department at Tesla failing to produce the 2.4, or to sell the 2.4 million? That is the capacity, minimum capacity this year, as Brian and I will go over in that report. Okay, I think that's all I got for you. It has been great talking to you.